Last week's gains in the equity markets were spurred by stronger trade data coming out of China, with exports improving by 11.5% and a 7.5% decline in imports, with an eventual trade surplus of $29.9 billion. China's quarterly GDP was in line with estimates at 6.7%, with industrial production showing an output increase of 6.8%. Optimism in the market extended to speculation that Saudi Arabia would agree to a freeze or potentially even a drop in production in an end-of-week meeting with other OPEC nations. Local retail trade sales increased by 4.1% year-on-year in February of 2016, with the highest growth in pharmaceuticals and medical goods, cosmetics and toiletries at 7.8%. Wholesale trade increased by 0.8% in February in comparison to the same period for 2015, with motor sales increasing by 7.2%. Mining production decreased by 8.7% year-on-year, with the largest negative growth rate in iron ore at negative 32.5%. The hard run on equities was bound to come under pressure at some stage, and the lack of commitment from the Saudis served to send markets in the early morning into decline, with Brent crude losing over 4% on the open. Whilst it looked as though there were going to be an all-out rout, with even the rand losing ground against the major currencies, things have since stabilized, and it seems like that gains in the Japanese market may be leading us out of the brief pullback. On the local corporate front, we have a number of stocks reporting revenue releases, corporate actions and dividends, including COH, Capitec, Datacentrics, Mondi, PSG, RCL, Standard Bank, Consolidated Infrastructure, Astropac, Anglo American, Clicks, DRD Gold, Kumba, MTN, Sibanya, Hulamin, and finally Harmony. We're just into US earnings season, and the traders will do well to be mindful of forthcoming earnings from large corporates and the following upcoming economic data. This week we are expecting ZEW economic sentiment out of Germany tomorrow, local month-on-month and year-on-year inflation data, and the rest of the week then consists of largely UK, US and European data, including US crude oil inventories, UK retail sales, the ECB press conference, and finally the Philly Fed Manufacturing Index and weekly unemployment claims out of the USA.